Hello guys, this is going to be a small video on how to use imbalance in footprints aka order flow charts. Uh, what is imbalance? Imbalance is, as the name suggests, it's an imbalance between the buyers and the sellers in layman terms, or in other words, it is the imbalance between the market buy orders and the market sell orders. Okay, so why do I say market buy orders and market sell orders? As we discussed in the previous videos, it is the market orders that actually move a market or an auction, and not the limit buyers. Okay, so it in no way means that the limit buyers are less significant. What it implies is the institutions or the big players are accumulating or distributing at certain levels using limit orders. But that is very difficult to find. Of course, there are clusters that are forming, and we know that there is some sort of absorption or distribution that is taking place at a level. But what happens thereafter is of great significance. So, what do I mean by that? What I mean is a series of strong aggressive market orders, let it be buyers or sellers, gives us an indication of which side is actually uh, controlling the present auction. Now it may differ on a monthly, daily, weekly, even hourly time frame, but what we need to do is understand how to best make use of it in a given intraday time frame, and use it to the best of our advantage. So having said that, now we are going to discuss the imbalance part, starting on an intraday time frame. So this is a 15 minutes chart. Now the first thing on this platform, go charting, what you need to remember is uh, there is a little bit of confusion on the settings part, so I'll just briefly go through that. Now the first thing that you need to be very sure of and always be consistent with it is what is the tick size you're using. Okay, so why do I say that? For example, over here I've used a tick size of 40. So uh, it gives me the result of 2. What does it mean? So for every 2 rupees of price movement, I'll get the orders seen over here. So what do I mean? So from 84 to maybe 86, I get these volumes, or these market buy and market sell orders getting displayed here. Okay, so if I, for example, if I increase it to say maybe let's say 100. Now this will give me this block, this particular block of 929 and 921, for example, is for 5 rupees or 5 points in Nifty. So I choose to, because I've been using it, or I change it depending on the volatility. For example, in markets where the Nifty isn't moving much, I'll reduce it even further, and so on. In markets like we are having these days, I would prefer it to keep it at 2, and it's finally your choice. I keep it at 2 so I can get the best of having granular detail as well as the long-term view as well. So now when I so that is with the tick settings. The next thing that you need to do is go to the layers tab, and within the imbalance setting, you have to go and choose the percentage imbalance. That is, for example, I have kept as 400. A ratio is the difference in the percentage of the buyers and the sellers. For example, if the buying is 400% more than the sellers at a particular level, that is 4x. So if, for example, there are 1,000 buyers and there are 4,000 sellers corresponding to it, it will be shown as a yellow tab, as you can see over here. And the number of imbalances, this is for the support and resistance zones. So a green or a red line would be drawn if there are 3 continuous or consecutive imbalances. So I'll just explain this on a chart. Okay, so this is the yellow that we're talking about. So as the setting is kept to 400%, so one more thing that you need to remember is, on a footprint chart, you need to look at the buyers and the sellers diagonally, and it is not looked at it this way, because the best bid and the best ask are always looked at diagonally. So this side is the as you can see, this side is the market buy orders and this side are the market sell orders. Now why has it covered this as yellow is because of our setting which we set to 400%. That is, these 188 orders are 400 times lesser than this, or you can put it the other way around, that is, this order is 400 times more than this. Now these orders, these 766, 67 could have been at one shot or taken or executed in a given amount of time, in maybe 10 seconds, 15 seconds. So that you can know by getting more granular, getting it even, getting the time frame even lower. But that doesn't concern us. What concerns us is that whether an imbalance was created or not. Now let's move on to analyzing this chart. Okay, so the second step that you need to do is, after setting up the imbalance chart, is having it monitoring the important levels. Now how do you monitor the important levels? You can use a plain candlestick chart and mark the support resistances. You can use a volume profile chart that I have here. It's nothing but a plain candlestick with volume profile and a VWAP here, or you can use a market profile chart like I have here. It's totally up to you, your levels, and you need to mark and you need to basically monitor these levels using a footprint. That is how you get the best use of a footprint chart. Okay, so you don't go around searching for every order here. You don't have that much time in a fast moving market. What you need to do is look at and decide upon certain levels, and when you see something, a footprint chart gives you the confidence to go right ahead and take your trade. Okay, so having said that, let's move forward. Okay, so this was Friday. Okay, and what we saw is aggressive selling stepping right from the open. Okay, so the first place that we need to look at, or you would rather look at, even if it is a basic price action or candlestick chart, is this one. Okay, why? Because this is the second point. Market having crossed this point, sorry for my lines being really wavered, this is the place where we would look at. Okay, so these levels, let's have a look at what these levels are. So these levels are approximately 600 to 620 zones. Okay, so let's move on to the footprint chart. Okay, by the way, if you're wondering whether you could have taken a trade with this early in the day, footprint wouldn't have helped you that much, but you know for sure that this is a balance zone which has been broken, so there is going to be a little selling pressure up till this point. It's basic candlestick charts where we're looking at. We're not looking at anything fancy right now. Okay, so when we look at the open, okay, right at the open, there is some bit of imbalance created on the buy side, and this just does not hold any, the market just doesn't respect it and goes right down. So that is one reason why we say we need to have 2 or 3 in a row, like we just marked it in the settings column, so that we know that the aggressiveness is really good and we can make use of it. The second thing you need to really take cognizance of is the fact that it should be on some significant volume. An imbalance on volumes like these small ones is of really little significance. Okay, so the first time where some little bit of support, as you may say, you can see on a footprint very clearly coming, is here. The market does bounce, but look where it really rejects from. So this imbalance, the market buy order, that above these levels that we saw, okay, this one is it doesn't help, or it's not even tested, and the market immediately moves back in the direction. So not looking at the imbalance and only at the footprint, if you really wanted to take a trade, you could take it, when the market breaks this point again, and keeping this as the stop loss. Okay, it's a small scalp, as you may call it, and then you look at where the next interaction take place. So that is not what we are here to discuss. We're here to discuss the imbalance part. Okay, the other place where we start seeing some imbalances forming is this one, okay, and there is a lot of cluster forming. Now this is a level that you could keep, which is 660 to 640 for a future reference, okay. There are a lot of imbalances, a small buy imbalance as well, but a series of sell imbalances. So you can now be sure that there is genuine selling pressure, and it is likely to follow, okay. So why do I say that? The next cluster that forms is somewhere here, and it is all formed below these buy imbalances, or rather sell imbalances, okay. So the market does auction lower and keeps auctioning lower, and the imbalances that are created in the next few 15-minute bars, there's one here, and this is the one that is, as some might call it, a capitulation bar, okay. So look at the imbalances that are formed here, okay, and it is followed by a cluster. So this is good if it is if you're on a sell trade, but what should actually ring your alarm bells is this, okay, a cluster getting formed, and the volume is significantly higher than the last two bars and almost equal to the opening bar. Now remember, the opening is a lot of contracts that are getting settled, okay, the overnight positions getting squared off and so on, and new positions being taken into. So it's very difficult to make sense of the opening 15-minute bar in a footprint, because you don't know what the orders are. Of course, if it opens a gap down, there could be the longs getting squared off, but after that, an equal volume bar getting formed here is of great significance. Now here, as you see, there's a cluster forming, okay. So this is where your alarm bells should ring, because what preceded it was a series of imbalance, like we see here, and a cluster forming over here, okay. Now it's for some it is time to book their profits, okay, and 500 being the round level is another place where people do look to book in their profits. And we can look over here that a lot of sell orders are there, and the delta, as you can see over in this bar, is really high, okay. 4.5 thousand, which is really high, which is followed by a positive delta. So there are market buy orders stepping in here. You could also use, as I said before, is your normal price action chart, and or a volume profile chart, wherein you get to know where a likely support is about to come, and you can plan your or exit your trade accordingly, okay. So this is a cluster that was there, volume profile, POC, naked PSC as we call it, or a basic basic analysis wherein a 15,500 could act as a support. Now our job, if we have taken a short, firstly is to cover at this point, not because of 500 or a previous support is there. Yes, it is there, but what we need to do is monitor these levels of previous supports and resistances. And what do we see? We do see that it is likely going to act as a support. Right at 550 also we see some initiative buying also stepping in, okay. So, and there are large volume clusters that are forming, which we can see from here. There is a lot of blue forming over here. It is again forming here. So that's a first indication that yes, there are some buyers stepping in, okay. Now once this trade is over, there comes an interesting part. Can we plan a reversal trade here, okay? So after so much of aggressive selling that we saw over here, okay, after so much of aggressive selling, we now for the first time see a cluster of aggressive buyers stepping in, okay. So we also know that this level, if it holds, there are a lot of sellers that are going to be in deep waters. Who are those sellers? They are these ones, okay. These ones are going to be in a lot of water if this price starts moving above these levels, okay. So they're going to start puking one by one, okay. So when this imbalance formed, the first part that we need to do is mark these areas. Okay, it's 560 levels. Okay, and we don't take a trade immediately. Okay, we look for it and we keep it marked. Okay, it is the retest of these levels is when we are interested in taking a level, taking a trade. Some would argue that taking a trade here is also feasible. Of course it is. The next set of cluster that forms after that is this place. We see an imbalance that is formed and it is invalidated. So this is the place where you come out if you've taken a long. Okay, and the second time where it again actually tests this imbalance is this one. Okay, now how is the imbalance being useful here is you see a C sell imbalance like we saw in the open, in case with the buy imbalance. Okay, and the auction doesn't move lower. So this is a very good trade where you can take buy order, and you can have your stop losses not much right here. Okay, why? Because if these levels break, okay, it's very likely it's going here. So why do I waste so many points, okay, to for the market to test this or even break the low? I'm not interested. If I am I have gone through all this area up till here, I'm not interested in saying the market. So 30 points is all I'm interested in giving, and hopefully the trade should work in our favor. Okay, so the next time I see an imbalance that is forming is here. Okay, and this imbalance is now not invalidated or not taken out by the next 15-minute candle. So you could this, and the other part to note is this is a VWAP. The first retest is the first test of the VWAP is obviously going to give you a retracement. The second one not so much, because the close doesn't happen there. Yes, the sellers do step in after the market imbalance, but the buyers are also there. Okay, and these buyers, what I want to see is you could actually book your partial profits here. Now what happens thereafter is another market buy imbalance. Okay, so the market goes there and then the choppy action starts. But what I'm interested in over here is that it isn't able to take out these levels. Okay, this zone is not being taken out, it's being respected. So I get a feeling here that the sellers aren't strong enough to take out this level, and after the 600 getting crossed, I know there is going to be some sort of short covering that can take place. Okay, so this white zone that is marked is because there are 3 consecutive buy levels, buy support imbalances, buy market imbalances as we talked about, and the green zone is marked. So we don't see a closing below this green zone. Okay, there are attempts that are made a number of times over here. Okay, over here, but it isn't able to take it out, and what follows is what we expected. It just rips apart. Okay, now the next time where we see an imbalance is these places, again these places. So this is another level that becomes significant to us. Okay, now do you remember the 650 levels? Because this is what we spoke of right at the open. Okay, if you remember, it was important because there were sell imbalances that were formed, huge ones, right at these levels. So what we can infer is these imbalances could also be those stops getting triggered. Okay, or new buyers stepping in. How does it get validated is by the fact that these zones hold. So these zones by and large, okay, did hold throughout the day. The VWAP did get tested, but there again was, there was no closing below these zones ever on a 15-minute time frame. Okay, so this is a carry forward for you. Okay, so if you don't remember these levels, you can mark them or you can have them just seen like this. So this is a carry forward level, and just let us, this is the one that we're talking about as of now. Okay, so this is a carry forward level, Okay, the volumes were at this point in time not that significant, but they were high enough. Okay, and at this point they were high enough. So this is a level which was tested, and there was no closing beyond this level. So this is a level that you can carry. 650 is the level. Okay, and the market does move on. This the last imbalance that I'm going to talk about. You can just keep looking at these levels and improving your understanding of this concept by going back into the charts. Okay, so the last imbalance I'm going to talk about, there have been a few that occurred in the later part of the day, here and here. Now, one thing you need to take note of is that these imbalances have been created in the last half an hour. Now, always suspect activity that has taken place in the last half an hour. Sorry for that. Now, these imbalances could be uh, the sellers that are squaring off their positions. There, it could be new buying positions that have been taken, and so on. But of course, what is of significance to us, that is that we mark these levels and keep them with us, as is done over here. So if we see any sign of rejection in the footprint, maybe tomorrow or Tuesday or whenever, at these levels, we can initiate a long, okay, because the market has gone up. And if we see any sign of support using a footprint chart, wherein you see a sell imbalance that is not validated, like we saw somewhere here. Okay, let me go back. Somewhere here, a sell imbalance, a lot of sellers coming in, not able to take take the auction down, and then you can immediately initiate, and then you see even the buyers stepping in. Okay, so this is some sort of a confirmation. But why wouldn't I take a trade here? Because we were aggressively sorry, this is a valid trade that we took. Okay, I wouldn't take a trade right here where we see a sell imbalance and the market not actually going down, is because even in aggressive selling pressure, I needed some confirmation that this is not going to hold. Okay, or these sellers wouldn't step in and take the market further down, or the buyers have stepped in. So the first confirmation I saw after that was these levels. Okay, so similarly, now this is the later part of the day, so I don't know what whether these buyers are strong enough, or whether these buyers are genuine buyers, or they're people squaring off their positions. But I do see a lot of interest and a high volume interest at these levels. So I'm going to keep this reference for the future. And exactly as we said, we could monitor when the market auctions back to this place for areas of support, or if it does give us a support in the footprint chart, it's a good point to take a long entry. So that's all, guys, for the imbalance in that we talk about in the footprint, aka order flow charts. Hope you guys enjoyed this video. Thanks for now. Bye.